Welcome to Biz Wire. I'm Joseph Nordstrom in Beijing. Last week, China reaffirmed its commitment to a domestic 2020 emissions reduction target with hundreds of billions of dollars in new energy investments. The $375 billion will be spent on new technologies and efficiency-boosting measures. Forecasts of a slowing economy have economists saying that demand for coal will grow at lower and lower rates, with growth having already peaked. While coal consumption will continue to rise through the 2020s, its share of China's energy pie will have a few bites taken out. Chinese leaders appear serious about reducing emissions after decades of pushing economic growth at all costs. A few major cities are now testing a carbon cap and trade program before taking it nationwide. Analysts say how the cap and trade scheme is composed now won't have a large immediate impact, but could set the stage for more ambitious cuts in the future. Hong Kong's South China Morning Post says China often misses domestic targets, and so its carbon emission goals for the end of the decade can be treated with a degree of healthy skepticism. What does seem more certain, though, is that leaders are serious about investing in new technologies. Chinese media reports of a plan to invest $125 billion per year for the next 3 years in energy-saving and carbon emission reduction projects. China's official goal to cut the carbon intensity of its economy by 40 to 45% by 2020 compared with 2005 levels. Carbon intensity is a measure of emissions per dollar of economic output. Well, so far, the country is far short of its 2020 goal and will require steep annual cuts to get near the 40% mark. Meeting this goal depends on GDP growth and how much the ambitious investments actually pay off. The South China Morning Post reports that growth in coal consumption and carbon emissions are almost perfectly correlated in China. This reflects the domination of coal in the country's energy mix currently and high carbon emissions from burning the fossil fuel. The Hong Kong paper says that under current trends, it would appear extremely difficult to halt growth in either carbon emissions or coal demand before the mid-2020s. From a practical perspective, this could be the earliest date for the launch of a cap-and-trade market in emissions allowances. Besides targets to reduce carbon intensity, the government has been increasingly alarmed by social unrest caused by environmental disasters and threats to public health. The State Council on Sunday said that environmental protection would be elevated to what they call a pillar industry that would receive government support in the form of tax breaks and subsidies. The State Council said China's substantial investments would ensure the environmental protection industry grows by at least 15% annually. The State Council estimates this would generate turnover of over $800 billion a year by 2015. The scale of China's investment, however inefficient it may be, is truly something to marvel at and shows the determination to reclaim its central place in the world. You're watching Biz Wire on the Blue Ocean Network. We'll be right back with more insight into the big picture of China's economy.